Master your emotions, master your risk smart.
What's up, everybody? Welcome back to RoyalBluFX. In today's video, we're going to talk about the game changer moneymaker strategy that I think a lot of you guys are going to love, a lot of you guys are going to benefit from. So whatever you do, please do not miss this whole entire video. Watch it all the way from beginning to end to not miss important information, because what I'm about to reveal to you guys is insane. And if you guys haven't already, go ahead and subscribe to this channel, because we always give out free content. For those that are new to this channel, welcome. So without wasting any time, let's begin with this video. All right, guys, so I'm going to show you how powerful this strategy is. The strategy really revolves around the retail traders system, right? The origin of the retail traders, which is really the break and retest traders. That's how a lot of us have started out when we started learning how to trade, right? So even including myself, when I started learning how to trade, it was all break and retest, right? But a lot of break and retest strategies just didn't do it for me, right? There wasn't a lot of, conclusive, strategies or ideas behind a system, say, for example, the break and retest, right? Whenever a break and retest happened, there was hundreds and thousands of ways to identify a break and retest and or enter from a break and retest perspective, right? So that's why I wanted to show you this powerful strategy now with the smart money concepts, supply and demand strategies that we use. So without any further ado, I'm going to start drawing it right here and show you guys how this works. So essentially, what you're really looking for is an area where price is consolidating, or anywhere where price is actually, where there's liquidity, essentially, right? You're going to see a high being swept, right? High going up, sweeping the liquidity, price breaking the low, sweeping the low of the liquidity, right? And then you get your break and retest doing this. Okay, so let me just kind of explain the concept behind what is actually happening here. Now, when the markets are running bullish, they're taking out the buy side liquidity, right? So there's a bunch of liquidity sitting up here. Now, it doesn't have to obviously be, range liquidity like this. It could be anything really, just as long as you see what liquidity, what the liquidity looks like, right? Honestly, even a single high just like this, I'm gonna show you guys what this looks like. Even just like this, right? And like this is already enough, just enough. It's liquidity already. It's taking out a single high or a swing high in this case, right? Just like that, right? At the end of the day, when we have a swing high created with the break of the low, another swing low broken, you already have a range from this high to this low. The range really starts from this high, right? And then once it breaks back inside, then now you have a swing low created that confirms the range, right? So let's go back to this example here, right over here. Hold on a second. All right, let me just adjust this. Okay, so what's happening here is what you're looking for is a swing high to take out liquidity, right? And then to run the low to essentially chalk or whatever, taking out the liquidity from this low, wait for prices to get back. Now, what is happening here is really interesting. I even created a little, rule or whatever you call this, a little tool here for me to know where the break and retests are. So this BNR stands for break and retest, right? Okay, so what's happening here is when the markets are running bullish, they're taking out liquidity. Again, I need to repeat this because this is really important. When the markets are going bullish, taking out liquidity, we have breakout traders sitting right here, right? So this is why it's a powerful strategy. You got breakout traders, right? People are running up, buying right here, right? They're trapped, right? So now that means we have orders setting up here, right? Once price runs low, right, now we have other breakout traders over here. When price breaks out here, right, we have other breakout traders right over here. So we're gonna mark that area as well, right over here, right, just like that. So now we have breakout traders from here, breakout traders from here, right? They're all trapped. Same thing, once price comes to the break and retest level here, we also have retest traders trapped in here as well. And I'll show you why, right? Now, this can go both ways. There's two ways to really see this, but I'll show you this first one, this first diagram here, right? When retest traders are taking this the entry here, right? They're selling. Now prices are going back up, right? Now you see what's happening here. Prices come here, stop right over here, right, and then continue bearish. Now this is a powerful way. I'll show you guys to identify this. This is usually a fair value gap in here with some context maybe behind. There's sometimes an order block right around here. The order block will be somewhere right around here, right? So either the market will come in, fill in the order, fair value gap, or we'll come in, fill in the fair value gap, and tap in the order block, just like this, right? So pretend that's the order block, that red shaped block here, and this is our fair value gap, FFG, right? So this is what's happening. So now what happened here is, not only did we trap the breakout traders from the buy side and the sell side, we also trapped in the retest, or the break and retest traders right over here, right? So now we have this interesting sort of, diagram here where everyone's trapped, right? And then we understand the context behind this, why prices should go bearish here, is because not only did we have a swing high and a swing low created, but we also trapped all the traders in here, right? Clearing out all the liquidity before prices start running bearish, right? This is the exact same model that we look at all the time. And I'm going to go show you guys on a live chart example. Now, another thing here is, I want to show you, this is the first diagram, okay? The other diagram that you can most likely see is the break and retest. The break and retest has successfully happened right now. This is why break and retest does work and it doesn't work, but it doesn't work for us in my context, because a lot of it is just, there's many, like I said from the beginning of this video, there's kind of hundreds and thousands of ways to really start entering from a break and retest perspective, right? So there wasn't really a huge context behind as to why, I feel so confident enough to take an entry from a break and retest perspective when I used to trade the break and retest strategies, those retail strategies, right? So this is why this right here, right, this one in here in particular, when the retest has happened, right, the BNR level right here, prices ran and left, right? But now, right, a lot of break and retest traders could be holding this position running bearish. However, prices run bullish again to run all the break and retest traders, right, and all the traders that were trapped, right, confusing everybody where to essentially, have their stop losses being swept, right? Like, for example, there's stop losses right over here, right? I don't know why I'm drawing that line there, but when there's a bunch of liquidity, we know there's a bunch of stop losses here, a bunch of stop losses here. So liquidity swept, more liquidity is being trapped here, right up here, the orders, right? We know this is the initiation of where the banks have actually switched the market and ran completely fast, right? Because it's not our doing. So we wait for prices to come back for the banks. We want the banks to come back and to mitigate their positions to run again, right? So this is a very simple context, a strategy that we always use, and it's powerful. If you guys get it right, it's a money maker, it's a game changer. So I'm going to go quickly on the live chart example and show you guys how that works. All right guys, so here we are on a live chart example. I already did the liberty of actually drawing out the diagram so you guys can see this much easier, much more faster, saving you guys time. So let's go with the first example right over here, okay? So the context still applies the same, the way I drew out the whole thing for you guys on the theory, on the drawing, right? Here's what happens, okay? So notice right here, we have price running up, right, sweeping liquidity. So we have a swing high, then we have a swing low. Why is this a swing low? Because the swing low swept liquidity here, and it also chalked as well. You can see that, right? So we have a confirmed range. Now, what's interesting is, okay, the break and retest can happen anywhere point in time. So that means if we even have a price from the swing high perspective right over here, right, you can see that there's a chalk, right? In fact, I believe there was, actually I didn't even see that one right over here. You can see that there's a break right here. There's the retest, right? Price went down, swept, confirmed, mitigated that order block, and ran, right? But we're going to talk about this one, the one that we actually see here. Right here, you can see there's a BNR level, right? Break and retest. And you can see how prices came in, right? Broke the level, came in retested, sold, right? Came right back up to sweep the break and retest level, right there. So we use the break and retest people right here, the traders, right, as liquidity, right? Notice that I have a liquidity line placed right above them, right? They are the liquidity, right? Then we have a fair value gap, right? You can include the order block if you want, or just the fair value gap, or you can include both the fair value gap and the order block to have a precise entry, right? Now, in terms of targets, you guys can do whatever, right? I'm not talking about targets and whatever, but in this context you can see that whenever we entered, we just targeted the sell side liquidity right over here. That way, it's sort of a confirmed target, right? Rather than having to say we'll target the main low, right? But in our cases, we always target liquidity for at least partials, and then we take the rest of the way targeting the main low or the main high as far as the rest of the profits. Anyway, so in this case, again, I just want to confirm and show you guys that when the break-in retest level has happened right over here, you have breakout traders, right? People going up here, breakout, right? Going above the liquidity line, breakout, right? Then we have breakout traders down here, right? So you can see that when price broke here, traders have sold, right? Then obviously have gotten swept. Prices ran, came back down, right? Swept the liquidity, swept the break and retest traders, and we went the other way, right? Just like that, right? So this is why this works. It's very powerful, right? Now let me go show you guys on the next one right here. You can see another break has happened, right? And right over here, you can see you need to allow the retest traders to come in as always, right? You can see right over here, there's your retest, right? So when price broke out, retested, sold, notice that price stopped here, right? It didn't go below the low. So it faked us, right? This is why the retest doesn't work a lot of times, but it does work sometimes, right? This one, in fact, just didn't run the low, right? Ran the break and retest traders, and what's interesting is there's a combination of this. It really depends on what you see and how you see this, but in this case you might be asking, well, why did you mark out this little high over there, right over there? Well, it's because there are more sellers that came in there as well, so we included these sellers with the break and retest traders right over here as liquidity, right? So these are your relative highs. So if you do see another high like this integrated with the break and retest traders right over here, then include them in there as far as part of the strategy, right? I mean, as far as liquidity goes, we need to include them as well so we can take them out, right? And then you can see here there's a fair value gap, right? This is your order block here as well. So you can include the order block or don't include it depending on how you like it. We do both. It just really depends on the context, the way the break and retest strategy, or at least this context, has been set up and played out. And then we would either do the fair value gap or the order block, or both. Really depends, again, like I said. So you don't obviously have to take it aggressive the way we do it here, but knowing that this setup works 99% of the time, we do it this way because it's we know that it's either you're in or price will just run quick and then you won't get the chance. In this one, you do have some entries, right? You do see your chalk here, right? It takes out the high, right? It takes out the low here. Price does come back to that wick over there, right over here, to this last weak demand, strong supply, and you could have entered there, no problem. But anyway, let's continue to the next example. Right over here. Now this is very interesting because this high here went on to sweep out this high, right over here, right? And actually, did it even sweep this high? Let me just check out here quickly. Yes, it did. It went above this high, swept this high, ran, right? That means that's our new swing high. Now here's our confirmation entry. Right here, you can see that there's a break, right? A break happened below this low here, right, with a strong impulsive bearish candle, right? And a lot of times when the way this works is you need to wait for a strong impulsive bearish or bullish candle to run the low or run the high. So in this case, it was a bearish, right? Impulsive bearish candle. And then what you do is you extend this, right? The break and retest level, you can see right over here. This one's a little tricky, actually. I'll show you why. There's your retest, right? People, the traders sold here, right? This is again why a retest just doesn't really seem to work for me. For a lot of people, right? You can see the retest traders sold here. Price ran. We identified our fair value gap, right? And I believe this was news. Yes. Oh, it's actually the U.S. Open. So this is U.S. Open, right? It came and filled the fair value gap and also mitigated the order block, and then price ran the opposite way, right? And then we just targeted our liquidity line just to have a safe and secured profit, right? You can also target the rest of the way for the swing low just to get the rest of the profit, right? Your internal swing low or your main low, like so, just like this, right? This is obviously has a lot to do with your trade management. So these were bearish examples. Let's go to the bullish examples and show you guys here. It really works all the same. Now, you could really profit a lot from these if you just stick to this strategy. You can just do this strategy alone and be profitable, no problem. Right here we have a break, right? A break and retest right over here. You can see price broke the high here, right? Price ran, it retested. You can see right there, there's your wick. It retested right here, right? So these guys came in and tried to buy, right? Then it ran the low. So now I marked out the break and retest traders as liquidity, right? And once they're retested, we'll wait for them to run, right? And then you can either target the order block or fair value gap, whichever comes first, and then you take the trade and go run the opposite way, right? That's how it works. Again, you can see here we have a swing low created. We also have a hold on a second, let me see, a swing high, which was right here. This is your swing high, right? It took out the high, it chalked below, and now you have a confirmed range. And so this here tells us that when prices ran the low, we have traders trapped in here. We also have traders trapped right up here, right, who bought here, right, who broke out and bought. So essentially, again, you're just waiting for that break and retest, right, to happen. You will look for prices to run below the retest level, right, where the buyers have bought right there, and then you go in and go for the buy right over there, right? You can obviously wait for a chalk boss if you want here. You don't have to enter the way we did, but there's your chalk boss right here, right? Here's more liquidity right below that liquidity line. There's your entry again for a safe buying right there, right? So let's look at the next example. Now this is kind of interesting. This one's a little bit interesting. It follows the same context, right? You can see there's your break. Let me just adjust that. There's your break. Here's your first buyers right there, right? The buyers, the break and retest traders right there. So I marked them as liquidity, right? Below them is a fair value gap, right? You can use this whole area if you'd like, but we like to use what we see first, really essentially the fair value gap right there. This is an entry. Now, why is this an entry? Now, I want to show you guys here. This actually is the end of, it's coming to an end of New York session. That's Los Angeles time, which means this is 12:30. So the New York session ends around, I think, 1:30 or 2:30. Excuse me. It ends at 2 p.m. right? So this is 12 p.m. right here when price runs. So if you bought here, you're running now into the Asia session. After New York, there's the Asia, right, or the Australian. So Australian runs, then the Asia runs right over here, right? And then all of a sudden, you see right here, this is 7 a.m. right over here. That means 6:30 a.m., which is this candle right over here. 6:30 a.m. is New York open. You can see the this candle right over here at 6:30 a.m. New York happens, runs the low, right, and all for a good reason, right, because again, these are still these will still be considered as the so-called the break and retest traders right here as well, right? Price runs low, you can still enter. This is still a hot area, right, to run the high, right? And there you go, New York left, right, for the day, right, just like that. So that's why this one's a little bit tricky, but it can work depending on the session, right? You want to trade your sessions time frame, your sessions. You don't want to just be trading, at the end of the session right here, entering here from the end of the session, because eventually Asia will be swept like it did so here, and New York opened here the next day and it ran. So let's go to the next one here. Here's another one, right over here. You can see we had a break. Look at that wick coming here, right? Simultaneously with this high over here, right over here. So you have your break and retest, right? Retest ran, and this is why retest does work sometimes, right? Not all the time, but sometimes. Oops. And then price ran, right? Came back, swept them again, and then you target the nearest order block or your fair value gap. In this case, it was the order block. You enter from the order block and run. And if you wait for confirmation, sometimes you get it, sometimes you don't. In this case, there was a chalk boss. There's no confirmation. There's no confirmation entry, and it price just runs, right? So this is why a lot of times I just take them the way I do, aggressive, without having confirmation, because a lot of times these just run. Remember, when we take out any sort of liquidity can either, once liquidity is swept, prices can either run impulsively the way this this did, right? Or it can give you some confirmation entries, right, if it chooses to do so, right? The market is random this way, so that's why I choose to go aggressive, because I know the liquidity is swept. Guys, I hope you liked this video. If you really liked this video so much and liked and understood the strategy, go ahead and throw up a huge thumbs up, a like on this video. Subscribe to this channel if you haven't already. We love you guys. Until then, we'll see you in the next.